Well, all right, tough stuff. Well, the collapse of this Silicon Valley Bank, is this going to cause a financial meltdown? Bank stocks getting hammered. The whole stock market's getting hammered. It's not the only thing going on, but it's a big thing. Joining us, John Carney, Breitbart Economics and Finance Editor, co-author of the Breitbart Business Digest. John, welcome back, as always. You just told me, I didn't know this, the FDIC has seized the bank, presumably thrown out all the officers in connection with the California banking authorities. Can you tell us more about that?
That's right. So they've been officially put into receivership. They say that all of the insured depositors will get their deposits back. But that's not really very reassuring because a large percentage of the deposits at this bank are not insured. They're above the insurance level. Mm-hmm. And so if you are a business and you had a lot of money in this bank, you now do not know. I mean, look, the odds are I bet people will be able to get almost all of their deposits out. I don't think the FDIC is looking to inflict harm on depositors, and that would also cause further panic about other banks next week. But this bank had something like 90% of its deposits are uninsured. So there are people who are at risk of losing their deposits, at least on paper.
So SVB, biggest lender to the Silicon Valley companies, the techies have had a very bad run in the last year, maybe 2 years. But you're saying there's also, not to be too detailed, but it's important, that there's a mismatch between the cost of their liabilities and the return on their assets.
Sure. I mean, one of the problems was when money was so freely available to all these startups, they didn't borrow a lot. So they had a ton of deposits coming in and not a lot of opportunity to make loans out to people. I mean, yeah, you can lend money so people can buy a yacht or, a fancy mortgage on some tech startup billionaire's, fancy mansion. But they really had way too much money, so they invested it in bonds. And in like Bank of America, I think has 25% of its assets are in bonds. But this bank had over 50% of its assets in bonds.
And now the curve is inverted.
Right, and so they're losing money.
So the cost of money and the repo rate and the Fed funds rate is, it's heading for 5. We'll call it 5%. It's 4 3/4. And the 10-year is back under 4. Oh, yeah, so there's a negative return. They're inverting.
Right. They're losing money, and at the same time, all these startups who were depositing so much money there are now withdrawing it in order to make, because they don't have access to free money anymore. Mm-hmm. So they're withdrawing it just to pay their bills. So you're having the deposits go down. They have to sell into a market where they are actually producing real losses, not just mark-to-market losses. Yep. And that is what sparked the panic, basically. People said, look, earlier this week, they announced something like a $2 billion loss on their assets. Mm-hmm. And people said, I better get my money out quickly, especially because these businesses, if you're a business and you have a deposit with Silicon Valley Bank, you don't want to risk not being able to get that on Monday morning. So you pulled it out today.
Yeah, the FDIC stepped in to avoid an old-fashioned run on the bank.
Absolutely.
Now, what's the risk that this spreads?
I think there's a high risk that it spreads. These things do not end when, people are right now looking at every other bank that, not the big banks, the JP Morgan, Citigroups, Wells Fargo's, they'll be fine.
Which are pretty well capitalized.
Yes, they're extremely well capitalized.
But the regionals?
The banking system is extremely well capitalized. And so I don't think we're on the verge of a financial crisis, but I do think we'll probably have a couple more bank failures ahead of us.
East Coast, West Coast, any sense of that? Real estate related or just technology
so commercial
related?
Real estate is in a lot of trouble. I mean, you think about all these loans into office buildings that now are not paying their rent because they're half full. So I think that there is going to be losses. I think we're going to see a lot of the California-based financial institutions get into trouble because they were so dependent on this, very cheap money ecosystem that was feeding startup culture and is no longer there.
What happens to the startup culture now? There's no cheap money, or there's no cheap money, maybe historically cheap, but doesn't matter. They're going to have trouble getting loans. Eh?
Absolutely. They have trouble getting loans and have trouble raising money because if you can get 5% on a treasury bond, why are you trying to get 10% on a, very risky startup? You're not going to do that. You might as well just double down on leverage and get at a treasury. So I think that they're going to have a lot of trouble being able to continue to raise money. And we're going to see a lot of the startups, start to tilt over.
Layoffs are going to come.
Yeah.
It's not the biggest part of the economy in terms of manpower. It's capital intensive, but still, it's a big problem. And you are worried that it's going to spread.
I do think it's going to spread because, look, this bank, Silicon Valley Bank, was very well respected. It was not.
Oh, it was the hottest bank.
Right.
Hottest bank.
Right. And so if you can tip them over this quickly in just a matter of days, I think people are going to start to look and say, uh-oh, maybe I shouldn't have my money in. I don't want to name the names of the other banks because I don't want to start the panic. But yes. Maybe I should put it into Wells Fargo instead. Mm-hmm. And any bank in a fractional reserve system can be tipped over if the depositors start to panic.
We'll talk some more about this on the radio tomorrow.
Absolutely.
Yeah, you got it. John Carney of Breitbart. Great stuff.